We're joined by Hassan Fawaz in Doha. He's the chairman and founder of GivTrade. Hi there, Hassan. It's good to see you. Looking very comfortable there, my friend. So we heard earlier that Asian markets are hit considerably harder than European markets, and a bit of why as well. Is this partly why the dollar seems to be benefiting so much in this crisis?
Well, traditionally speaking, we see that when you are heading into, let's say, a recession or the fears of heading into a recession, people tend to liquidate their portfolios and the holdings of their assets and tend to move into the dollar because they want access to cash. Because during disruption, during extreme economic events, you cannot do anything with your gold or with your silver or with your stock portfolio. You need dollars to cover your positions. You need dollars to fund your business. You need dollars to fund your lifestyle. And what this war has incurred on the world is not only disruptions in oil. Everyone is talking about disruptions in oil, which is causing all of this chaos. This is not only about oil. This is also about, it is magnifying the existing problems that we have in the financial system. The existing problems meaning that we have problems in the private credit funds. We have problems in in inflation and recession. So we are heading into not only a recession, also a stagflationary environment, even before this war happened. So this war is just what the war is doing right now. It's magnifying the existing problems that we have in the financial system.
Yeah, that makes a lot of sense. Thanks for explaining that. Yeah, and let's talk about aluminium. I mean, to some it may sound niche, but why does a jump in aluminium prices matter for the wider economy?
Well, it matters because aluminum is important for global productions, especially for automakers in Asia and for industrial factories. But let's not only talk about aluminum. We have a problem with aluminum, with helium, with urea, with fertilizers, with petrochemicals. Every single sector is gonna suffer. You have, for example, helium. 30% of helium comes from the region, and this is very important for the production of semiconductors, which is a main base case for all the AI companies. So if that gets affected, so you have disruption in that sector as well, and it will disrupt the growth. And I don't disagree. I don't agree with the fact that everyone is saying that the least affected in this will be North America. I think ultimately, since the US is a major exporter of goods and they have a huge trade imbalance with practically everyone, so the higher prices in practically everything will ramp up inflation in the US, and it will ultimately hurt the US consumer, which will cause the Federal Reserve to halt rate decreases, or at least maybe in some cases, if there's a severe inflation print, he might have to raise interest rates again. So you are heading into a different complete cycle whereby deflation of assets will occur because of this. So the thing that nobody is understanding, we had two major problems that were happening before this war. Well, one is in the Japanese bond market, there was fears about the unwinding of the carry trade. And then you had another issue, which is the inflationary environment that is in the US markets. And the problem is, how do you solve less access to capital and higher inflation at the same time? Because we all know that Japan was a major source for hedge funds and investors in the US stock market to get cheap capital and reinvest it into the different indices. Right now, everyone is suffering. Even the consumer is suffering. There is mass layoffs practically everywhere. Everywhere you ask, everyone is waiting to see what's going to happen. So we're not going to see any new hirings. We're going to see layoffs. We're going to see lesser production. And this is going to ultimately cause, I think, in my opinion, if this war continues for maybe 2-3 months down the road, I think we are heading into a global meltdown of practically everything.
I know you said it quite calmly, but that is a horrible thing to consider.
I'm saying it calmly. It's the morning, that's why.
I've got about 13 seconds left with you, Hassan. But every week we see crashing, recovery in the stock market, global stock markets. Do central banks still respond to shocks like this, or are they more likely to look past them now?
Look, central banks have to respond, but they don't respond on a short-term basis. They need to see a bigger problem for a longer period of time. But the thing is that there's a saying that we say that bear markets tend to make a fool out of bears and out of bulls. So this is what's happening now. You see in bear markets normally, which is happening right now, you see massive corrections to the upside because this is how markets move. So I wouldn't be too optimistic about those corrections. I think every correction in this bear market is a chance to sell this market in different asset classes, not only in one asset classes. For the short term, at least, if this war continues a bit longer, even the prices of gold and silver will suffer, which we always said that they will go up, but right now they're gonna suffer short term because of what's going on.
Hassan, thank you for breaking this down for us. Hassan Fawaz at GivTrade in Doha, thank you.